Ladies and gentlemen, we made it. Sorry for missing last Sunday. I was on an airplane. I shouldn't say I was on an airplane. And it just wasn't possible to string it together. So every now and then we will miss a show, unfortunately. But speaking of missing a show, but streaming to his audience, Mr. Remy Rye had to do little daddy duties. So he won't be joining us today. But if you are tuned into his socials, thank you for tuning in. This is also where I usually say, if you're not following us, Mr. Remy Rye, Canna Crypto Pope, and Mr. Goat3d on Twitter and NFAOFC, please give us a follow, a like, share the room so we can drop what we see, what's going on in the markets. I've got my co-host today, Mr. Goat3d. How you doing, brother?
What's up, guys? How you doing, Kenna, man? Great to be back again, unfortunately, Ryan's not here with us, but we're still going to keep it going. We're going to be sharing a lot of insights from the market, what we saw from last week. We're going to be looking at some of the releases that came out, economic releases, and we want to put it all together and find out what happened, The people are panicking right now, right?
Was there so much panic? Man, I had somebody tell me yesterday in one of our Discords that the bear market was here. And it was the best laugh I had all day. I was like, oh man, talk about riding the emotions of media and not looking at data. It was priceless, absolutely priceless. But let's dive into it. You want me to throw your screen? Are you ready?
Yeah, let's do it, man. Let's go straight to the charts.
Go ahead, sir.
No, sorry. I was just talking to myself.
For people that are tuning in, we're going to go through what we call what I call the money flow cycle. Mr. Goat is going to talk about other markets, the S&P 500 and a few things. We're going to cover our regular tokens as well. And at the end, I've had a few requests to explain some indicators that are free that everybody can use and answer some tax questions. But please understand, we are not tax advisors. We are not financial advisor. This is not financial advice. In course, brought to you by the one and only. Mr. Goat3d, you load up your screen. I'll throw it on screen and we're good to go.
Of course, I'm on now, man. I'm on now. Let's do it.
You're there.
I'm there. Okay, perfect. So last week we had a very eventful week. So I'm on Forex Factory right now. I'm showing you guys what economic releases came out last week. We had a lot of European and GBP currency releases, but I'm not going to cover that. I already covered it in one of my videos at Zero Line channel, which I will post a link. You can go and have a look at that, what I mentioned about these currencies and what happened. But what was very, very interesting was literally on the last day of last week, which was Friday, last working day for the markets. And President Trump actually spoke at 3:56 p.m. EST time. And he said some stuff that literally shook up the market totally. I'm going to go through an article of what happened when he spoke, okay? So I got an article up on Reuters, which was posted a day after Friday, which was on Saturday, the 22nd of February. And it says here that Wall Street ends sharply lower on mounting concerns over economy and tariffs, okay? So it says here in these two sentences, it says that all three major US stock indexes moved decisively lower on the heels of the data and continued their slide into afternoon trading. The S&P 500 suffered its largest single-day percentage drop since December 2018. Massive, okay? So we had a massive drop on the on the S&P 500, and it took it down by 1.71%. Nasdaq was down 2.2%. Dow Jones was 1.6%. And biggest drops.
Huge, man. Like, people got to remember, in the stock world, not the crypto world, the smaller percentages are massive. In the crypto world, we're used to these massive, 10, 20, 30% swings. In the stock world, 1.5%, 2%, just because of the total market caps, huge money swings. Sorry to interrupt you, buddy.
100%. There's so much money involved in the stock market that a small percentage like that just creates massive panic in the market, in the stock market. And it actually, funny enough, it had a positive impact on the US dollar, neutral to positive. Investors, it says that investors may buy USD as a safe haven during stock market drops. So when you see the stock market crashes, usually investors are pulling their money out and going into USD because they see USD as a safe haven. Okay, and the impact that it had on US 500 was really, really bad. The fall on the index shows that investors are pulling out of stocks due to economic worries. The next thing I want to mention on the article is that economic data showed US business activity decelerating and consumer sentiment deteriorating. I find it hard to say that word. With survey participants expressing an increasingly gloomy outlook in the face of economic unknowns. So the consumer sentiment falls, negative consumer sentiment, inflation expectations rise. People are less confident about the economy and expect higher prices. And this had a positive impact on USD. Higher inflation expectations may keep the Fed hawkish, which will support USD. So the Federal Reserve will see this as a sign to not move the interest rates at all, or even raise the interest rates, which will drive the investors to go into USD because they will get better yields on their money. And this had a negative impact on US 500 because weak consumer confidence can slow spending, and this can hurt company profits and stock prices. And the last 2 points that I'm going to mention is that the volatility index, which I will show you guys the chart, closed at its highest level since February the 3rd. So the volatility in the market increased dramatically, okay? And the US president, and let me explain this as well. So when you have a rising the volatility index, it means that there's less stability, in the market now. So, and long-term investors look for stability and steady growth. And high volatility can cause uncertainty and portfolio losses. For the overall economy, too much volatility can signal market stress, which could reduce consumer and business confidence. But for regular investors, such as scalpers and short-term investors, it's actually a good thing because volatility can create better price action and give us better, better results in the market. And U.S. President Trump, which I mentioned at the beginning of the video, he said he will soon announce new tariffs covering lumber and forest products, in addition to previously announced plans to impose duties on imported cars, semiconductors, and pharmaceuticals. So planned tariffs on lumber, cars, semiconductors, and pharmaceuticals is good for the dollar, neutral, positive. If tariffs slow global growth, USD could strengthen as a safe haven, like I mentioned. And the impact on US 400 was bad because tariffs will rise costs for company, which could hurt profits and push stock prices down. So this is what happened on that day. And look at S&P 500 right now, guys. We had a 118-point drop on that single day on Friday, which was massive. Look, compared to other candles, look how massive the drop was. It literally overtook all these other candles here. And the volatility was also, if I move this out the way,
You can just
volatility. The volume was above average, massive sell volume compared to the last 10 days. Volatility was also above average compared to the last 10 days. And look at the RSI, guys. The RSI literally crossed 50% and it moved into a low demand territory, which could potentially become an oversold territory. And if this continues, we could see S&P 500 get out of this zone and move further towards the demand zone at 5,800 if this selling pressure continues. And if we even continue further than that and we break below this area here, we could even retest 5,700 area as well. And these areas could give us good scalping opportunities to catch a bounce. So these are possibilities. What do you think, Candace, so far?
I mean, you nailed it. It's how does this all relate, right? And when there's fear in the major markets, we're looking at fear in the crypto market. And that's where I think the money flow cycle comes in. But before we jump into that, because you're talking about the S&P 500, I'll share my screen here.
For sure.
And we talked about gold, being the safe haven. When there's fear in the markets, where does it go? And it goes into gold. And gold has just been ripping. We have our bullish trend still just pointing to the upside. Critical greed here was firing, and last couple of weeks ago, we said, we'd like to see a curl here and have gold move down to the downside, because that indicates more confidence in higher risk markets like crypto, to see the total market cap of crypto start to pump. Well, obviously, we did not see that because of, a couple of factors. The one that you just talked about with the tariff scare and wars between Trump, China, Canada, and Mexico. And then we also had, the Libra incident, and all of that takes money out of the total market cap of crypto and puts it more into safe havens like gold. And these are people, we're talking big dollars, and I'll get into that when we go into the money flow cycle. Because big dollars, we talk about billions. And I did this exercise with people, and you've heard me talk about this, Mr. Goat3d, a few times. Money isn't taught. There's no programs in school. It's not typically passed down for generation to generation. And a lot of people don't understand money. And in the news, and you'll hear us talk about it and other people talk about it, they'll talk about millions and billions. But these are terms I don't think a lot of people truly understand. And I always say most people understand time. So to put this in perspective, if I gave you $1 every second, $1 every second, it will take you 12 days to get to $1 million. If I did that same exercise and I gave you $1 every second, it takes 27 years to get to $1 billion. So that kind of gives you an idea of the difference between $1 million and $1 billion and how vast it really is. So when we talk about the money cycle, that is where this comes into play. So let's bring up what I call the money flow cycle. And this here, I've left my little notes from when we talked about it before, is the total market cap of all of crypto, right? And we've said we've been consolidating in this box. We wanted to come out and retest it. So let's clean this up a bit. Give me a quick sec here on different computers all at the same time. And let's actually throw in a rectangle, right? And we'll go to the wicks, minus that one stinky wick. I tend to like bodies. I'm going to stick to the candle bodies. Mm-hmm. All right. So we've been consolidating in this zone, as we can see for, let's see, where's my date and time? Pretty much, let's go from here to the end of there would be, right? So 93 days, 3 months we've been in this consolidation box, right? So when we look at what happened a little while ago, and our peak here, where we retested it, and then this is where we fell. And then this was the event not too long ago, 817 billion with a B in 12 days left the crypto market. That's massive. Huge. That's why we saw the blood on the streets, right? And what have we pulled up since? Well, since our bottom over here, we went up. And this bull run's just been so annoying because of this bounce and consolidation in here. We got up to 185. And then, of course, now going 3 days, we've taken out another $128 billion. And the reason for this last one, of course, was the Libra crash, the people that were scared. Where did this money go? Well, some of it would have been liquidated in leverage, and a lot of it probably went into gold, because just as Mr. Goat3d was saying, confidence was also lost in the S&P 500. So on the daily, we can see a nice double bottom here. And we talked about a while ago, we wanted to see this curl, right? We didn't get it because of the Libra and the tariff wars and what else, right? But what we did get is compression, right? So now we've been in this area in here. This is our new little consolidation area between here. Over how long, right? And in this consolidation area, we're looking at about $136 billion just in this range from wick to medium, just quick and dirty, right? But what we've done is we can see the micro. So I have my own indicators, NFA, OFC, that are all up in here. And we're going to go over some free indicators and some of mine later. It is basically a style of an EMA cross. I just use a very specific number. And I call them micro bears and micro bulls. And when it's going down to the down, it's a micro bear. And when it goes to the upside, it's a micro bull. But we're starting to see compression, and we're starting to see the belly of the curve. We're right below the median of the Bollinger Band. And this is indicating, hopefully, but it's showing us we're going to start to see that cross. And we should get a bullish cross here, up and down in price action. And of course, what we're going to have are these levels of support and resistance of where profit is going to be taken. So this is why we're going to have all this bounce up and down. So, to hear that when we zoom out, and I'm going to take away, oops. Forgive me. When we zoom out, people go, oh, the bear market is coming and things like that. Let's get real. The media said, market crashes, and they did, as we looked at. But let's look at the bigger picture. What are we seeing here, right? I'm going to delete a bunch of the stuff because now we're looking on the weekly. And when you really want to know what's going on, zoom out. For the people that love to live on the 15 minutes and the 1 hours and things like that, you're not seeing the true picture. What are we seeing here? Right? All day long.
Bullish wedge channel, descending channel, potential breakout soon.
A thing, right? And what we want to do is we want to come out of it, come back, retest, and then break out to the upside. And I believe we'll probably get into that $4.5 to $5 trillion market cap for all of crypto right now. But like I said, this has been a tough bull run, a tough cycle this time, because we've had all of these crazy events nationally, and we also have the commercial market. Retail's not in, so we get manipulation now by the big boys, and that's exactly what they're doing. And you're falling into the trap if you're panic selling. Opportunity is made on red days. We buy the blood on the streets. We don't panic during them. Everybody knows buy low, sell high. Well, to buy low, you have to buy red candles, And so this is the total market. This is all the money that is in crypto, right? And when we zoom in on the smaller time frames, we do start to see that, we're starting to get these bellies on the 1 hour. And if we go back to this one on the daily, let's make it bigger so you can all see. On the daily, we are coming up to that bullish cross. Why can't I delete that? Anyways, right? So we're, like I said, we're going to have resistance at the 3.3. We're going to see resistance at the 3.51. We're going to see the resistance at the 3.64. And what we're noticing, big money is moving fast out of the market. Billions, right? And 27 years, $1 a second. This isn't small chump change. So the next thing I always hear is there's never going to be an alt run, or we're in an alt run when some alts are pumping. And I've had this channel. Now what we look at for alt run is dominance. How much of the money that is in the total market cap of crypto is in Bitcoin, right? And right now, 60% of the total market cap is in Bitcoin. And the reason I said we haven't seen an altcoin cycle yet here is because this is where we broke trend. Well, technically right down here was our reversal, right? But this is where we were hoping, and it came down. So following the support there. And we can see early December where there was all that euphoria and people were saying, oh, altcoin cycle when ADA and XRP and everything else was pumping. And in here in December, I said I was getting out of alts. I lost, I think, about 300 followers. And people called me crazy. And this here is a great sign to me when I get those comments that I'm on the right track, right? Because retail are sheep and they typically don't know. And what we did last time is we extended this, because I want to leave this because this has been on for eons, is we said we want to see dominance break down and finally break out the bottom of this channel. As soon as we break out the bottom of this channel, this purple line that's been going on as our support forever, then we can say we're in an alt season. And I said, look, up here on our stochastic RSI, we're overbought, for lack of better words, right? And that's when we were up here at this peak that would have at the extension just kissed the top of it. Now we're starting to come back in the pattern that we want. We want to see this curl. I can probably move that to there now. We want to see this curl happen on our EMAs, right? Now, the reason we cranked up on this green candle here, obviously from what's happened with the tariffs and the Libra. Money came out of alts, went into Bitcoin, and or left the market, which we saw with the total market cap. Mm-hmm. So we're still looking like we have some good downwards pressure on a 3-day time frame, which means we're coming closer and closer to alt season. But when we zoom in on the daily, now is where it gets interesting, because the markets are saying it's over. I'm going to take all these indicators off because that might be confusing for some. But we can see that we're starting to curl down to the downside. And when it happens, you can see how fast it happens, right? And lots of pressure. So we just need the market to chillax a bit, just relax, breathe, and we can start to see hopefully this flow out of Bitcoin and into the alts. Speaking of Bitcoin, let's go to 3-day Bitcoin. Let's take some of these indicators off. Let's just keep it simple. All right. So if you heard the news in the last few days, what were they saying? You know, Bitcoin crashed. You know, where did Bitcoin crash? I mean, let's use candle bodies. We'll ignore the wicks because the majority of the price action is between the bodies. Where's this crash? We had a normal pull down that we've seen how many times? A crash would be coming back down to the 73 next level of support, 72, 73,000. And where are we going to stop before it gets there? Oh, most likely at, the 92s and then maybe somewhere in here. It is starting to pinch. But the stochastic RSI is telling us we're in a buy position. We're moving to the upside. And all this compression, and when we zoom out, same thing again. Here, not really a flag, but more of a wedge. Coming up, bouncing around, probably going to see some tight price action, want to come out, retest, come out probably to our level of resistance here at 102, do a little fake out back down to 99, and then hopefully retest this 106,420, which I called on a show eons ago. So I'm not doom and gloom. We're still in a bullish trend in a bullish market. Are there going to be ups and downs along the way? Absolutely. If you're panicking right now in the markets, to me, it just means you're over-invested, or you're watching the media too much, or you're watching the smaller time frames. Because when we zoom out and have a look, nothing's really changed.
Yeah.
Right. And then when we jump in on the daily, everybody is wondering what these indicators are. Maybe they'll do that another day, but it's just where liquidity is sitting for shorts and longs. So, woo. I mean, when we talk about the micro bear and the micro bull, and we look for these bellies, same thing, and we know weekends suck for volume. It looks to me like we're building compression, about to get across, and then we'll have that stagger to the upside. As long as we don't have any more FUD or any more weird news from any of the countries, because we could easily come back down at these levels in here, but I don't see it right now. There's no indication to me at the moment that that's going to happen. So, and everybody's preaching 140, 180, I think Bitcoin will get there. Is it going to get there in the next few days? No. We know we have all these various steps and levels that we have to get through and retest to get above. So still very bullish on the whole market. Has it taken a bit of a crap? Absolutely. Do I think it's going to last forever? Nah. But, we've had so many black swans and market swings, and there could also be the flip side of that. We could have great news, and then we do see the printing of rockets, So there's a little bit of the money flow for the total market cap, the dominance, and Bitcoin. Where are you at right now, Mr. Goat?
Right now, I'm looking at the total on the weekly, and I'm going to also show a glimpse of what the altcoin total market cap looks, which is the market cap excluding Ethereum and BTC. But before that, I'm just gonna zoom out, like you mentioned, I want to zoom out and show people what's actually going on. The bigger picture is the most important here. I mean, all the short-term fluctuations in the market, they're just noises. Okay, all you need to focus on is on the long-term trend of the market. If we draw, can you see my screen right now? Yeah.
Oh yeah, you're up.
If we draw a trend line from the top of each cycle and we move up, we're going to see that these two areas correlate with each other, right? And then the next correlation will be around this area somewhere, okay? And that will put us around the 7 to 8 trillion target. I'm not sure how far it will go for this market, because every time a new cycle begins, it seems like the returns are diminishing. It's getting smaller and smaller as we go forward. So I don't have a crystal ball to tell you exactly how far we're going to go, but from the TA that we can see that these areas correlate, okay? And we have currently gone through the bear market of the last cycle, and now we've entered a bullish phase. So as you can see the cup and handle formation, and we've broken above the previous all-time high here. And it seems like Canada showed you guys, it's consolidating right now. And it seems like it's ready to go another leg, and potentially one more last leg before we see the top of the market and we go through another bear market again. If we zoom in a little bit to where we broke out, which was around here from the bear market that we had, and we bring in the altcoin market cap as well, and we put them next to each other, it seems like altcoins currently are lagging behind. I'll put a box around here of where we broke out, okay? And it seems like that hasn't happened yet on alts yet. We haven't broken the previous all-time high yet on alts. It's telling me that alts at the moment are undervalued, and they could give very good returns if you're able to find a good support to get in cheap into alts. Like here, we're at support right now. Okay, if I draw a support from the previous resistance that we broke, and then now that the new resistance is here now, that area that was resistance before is now support, and now we've reached that area again, and we've retested it, and price has held this area. Okay, it looks like it's held. Look at this wick up. If I bring in the volume as well, there's probably going to be huge volume in this area.
Massive.
Look at the volume increase. Like the market is not like doing this randomly. There's volume increase because there's demand in this asset class. All right. In order for the market makers, Wall Street, to exit the market, they need to create beautiful price action again, to bring in more liquidity into the market, and that means pushing price higher and higher, creating higher highs and higher lows. And then when the euphoria comes into the market, when everyone becomes happy again, then that's the perfect time for them to grab all that liquidity and just dump it on everyone and just create the next bear market first phase. And then those who are holding in this area, they get wrecked, and they have to wait another cycle for them to become profitable again, or they can just sell at a loss. All right. So we want to. Yes.
I was just going to say this is the accumulation time, right? Like
reaccumulation, yeah.
Where when people panic is usually a good sign. You've heard me say a million times, just do the opposite of what everybody else is doing. If you don't know how to trade and everybody's panicking, buy. When everybody's cracking bottles of champagne and spraying down boats with it, sell. It's really that easy. But it's not, because of the emotional aspect for a lot of people.
Yeah, man, exactly. And some people are new, and you don't blame them, because when you enter the market as a new trader or someone that's new to the investment world, you will be panicking the whole way up, in my opinion, because it's every price action that you see is new to you. So you have to evaluate it, understand it, and get used to it, get used to the market, and then in the future, then you become bulletproof. You know what I mean? You understand what's going on. But because some people are new, they don't understand what's going on, and I don't blame them, because we used to be in the same position before. When we first started, everyone is, and if you can grasp the concept of support and resistance, the trend of the market, where we're going, the actual overall picture of the market, then you get a better idea of what's going on. You don't want to get too much distracted into the noise of the market or the social media. Social media, there's a lot of people that just talk just for the sake of talking. But if
we're in a bear market, everything's crashing.
They're either trying to scare you out so they can buy cheaper, or they just want to create content to just fill up their page. You know what I mean?
That's
well, you got to be.
Yeah, they want their clicks. Absolutely.
Exactly. And you just want to be a realist sometimes. You have to look at the market logically, in a logical way, not in an emotional way. If you become emotional to the market will discipline you. But if you look at the market logically, you'll be able to have a clear picture in your mind, and be able to make better decisions in the market. And look at the Bybit hack, for example. This was the Bybit hack that happened Friday. Did it really move the market? Really? It just pushed price back into support.
Saying it crashed Bitcoin, and I was like, where did it? And that's actually, like, speaking of community, and they lost 1.5 billion in that hack, and Zach's already on the case, and it was the Lazarus Group. We know that, and I don't think they'll see it again because it's the Lazarus Group. But the other exchanges, I can't remember all of who did it. They donated a bunch of their ETH to keep Bybit solvent. And I think that speaks volumes to the kind of community that actually crypto really is, because we still don't have retail here, and there are little pockets of these alts, of memes, that are based on the fundamentals of community. And that's where, in these times right now, if you find good ones, now's the time to accumulate, because as soon as that dominance drops,
Oh,
that's where the money is made.
talk of dominance. Just look at it, man. Look how beautiful it looks right now. It's literally, when we had the previous old season, it literally dropped like this much all the way to support and created support here. And it took us 130 days. The movement that Bitcoin takes a year or two to make, altcoins will make that move in a matter of 130 days. Okay, so imagine the gains that you can make in such a short amount of time. It's never happened in history of investments. It's the first time. And we actually we should be very, very lucky to be living in this era right now. It's like a gold rush. And we should be taking advantage of these kind of movements in the market, because I don't think later on in the future we will get the same type of movements again, because of the returns, the shrinkage of returns over time, the diminishing returns over time. And we've reached literally the area where we previously got sold off from. You see this? We got sold off here, and we've literally wicked into it, and we got rejected. Look at that rejection. Let me get my volume up as well so you can have a look. Look at that rejection. You see the volume rising as well, similar to the previous one. It looks very similar.
And you can tell because the fear. Everybody's saying it's over. They're selling out like crazy. And that's exactly what the market makers wanted you to believe, think, and do. And then now the pump's going to happen, and you're going to have all the FOMO buys.
Yeah, exactly. And it looks like it's also hit the median of the channel as well, the ascending channel. And every time it hits it, it gets rejected and goes back to the bottom. So you might get a movement back to 58% again. But this time, it could be a crash this time to just take out all these support areas and reach support. And we could maybe even in this cycle go back down to those support levels again. And if that happens, that means there's going to be crazy returns in the altcoin market. And as I've showed you, the altcoin market, we are still early. We still at support before breaking out of that major resistance. We're still there. So we still got time to accumulate. I'm accumulating heavy. I'm buying a couple of tokens. I'm buying UFT. I recently dipped into Griffin because I feel like Griffin is very undervalued. I've bought a lot of Fred at the bottom. If I show you Fred, it literally pumped recently, actually. Everyone was thinking, why, like, this guy's crazy. Why is he buying so much Fred? Because the risk to reward is so good right now. Just look at it. This was Fred. It was just literally accumulating in this area, in this massive area. And the market, when that Bybit hack happened, it didn't even phase Fred. Fred was literally stationary. And then a day after, boom, goes up by like more than 70%. And now it's
what the hell is Fred?
Fred is like a meme coin. When Trump became president, there was a lot of news circulating about this squirrel getting killed or something like that. And then a raccoon also got killed in that same period. And then that raccoon was called Fred, and that squirrel was called Peanut. And those two coins were created. And
I remember all of it now. Yeah.
They're literally like the Dodge and Ship of this cycle, basically. You know how Dodge goes up and Ship goes up? When Peanut goes up, Fred follows. So, and because Peanut is on Coinbase, there's a high chance when retail come in, they're going to dip into Peanut as well. They're going to put some money into Peanut as well, because it's so easily accessible to retail. Coinbase is like the main place retail go to buy their first token when the old season comes. So Peanut could be on their portfolio, and Fred has the potential to also get listed on major exchanges after that, because it follows Peanut. So there's a lot of exchanges pending for this one. So in my opinion, it's a good risk to reward play. It's so cheap. Look how cheap it is. The downside is so limited right now, but the upside is just ridiculous. It could be one of those gems.
It could be. I don't know. You never know. It's about the community. I don't know anything about that particular community. So but that's why we're here. We discuss all the different ones. Let's jump into some of the majors, though. Sure. Let's get into a little bit of Ethereum here. Give me 1 sec. So many screens, so many computers. So Ethereum's not dead, people. Ethereum is the start typically of when this is going to crank. Why can't I see? There it is. clean it up a bit. This is usually when Ethereum cranks is when we start to see the alt cycle really begin. And same thing, 3 days, we're starting to see the belly of the bear. This is typically where we start to get in here, and then we start to see the bullish cross and price movement to the upside again. And these are your great entries. And we even said before, a long time show ago, that, support resistance down here, you'll be lucky. And I told you, put a stinky wick in and you'll catch it. Well, if you took my advice, you caught it at that $2,200 level. And where are we since then? There's a quick 24% for anybody that took that trade from our last show. And we are still going to the upside. We are going to have, support resistance at 32, 36, 37 area, just shy of 4K. And then what we need to do, what I always say, is we need to come back down, retest up here before we can crank off again towards the upside and hopefully see some nice all-time highs. And institutions are buying Ethereum like crazy. It's always, for whatever reason, being fudded at the moment. And I think a lot of that's also to do with Solana and, what's going on with Solana. Same thing with all the news lately and the Lazarus. Look, we said we were going to come up, pose for a breakout. Well, breakouts don't always go the direction you want, especially when news is involved. And we can see we had this compression. There's your breakout, right? And then down. And of course, Ethereum took Solana took a big hit because of the Libra scandals surrounding it. So what we're going to start to see now is hopefully we'll start to see, in this area here, it's come up, we'll hit some rejection here, have to retest the top of this, and then work our way back up into the all-time high. Remember, this was also all-time highs. So I believe it was, yes. So we're still looking like we're mellowing out. We were in a buy situation on the stochastic down here, which if you caught the 168 areas in there, great buy. Retesting it right now. You might get another stinky wick down at 161.05. Wouldn't be a bad idea to have a buy order down in there because we still have it looking like a little bit of downwards pressure. But I think we're starting to see the turn. I really do. Manipulation Mondays, turnaround Tuesdays. I think we'll start to see hopefully midweek this week the total market cap of all of crypto start to improve, which will then, of course, trickle down into all of our majors. Mr. Goat3d, where are you at, bro?
Yeah, I think I pretty much covered some of the coins that I wanted to talk about. I can go through some other tokens as well, maybe UFD, PAL AI.
Let's hold on. How about Fart Boy? Don't you worry. I'm going to end the show with Fart Boy, and I'm going to show you how to load up some free indicators, and I'll show you how to briefly set them up and kind of how to read them because we've been getting a lot of questions on those. And I agree, Fart Boy is the best community. I agree with Crypto Lens, but in honor of Remy Rai, who's quite large in the UFD, why don't you do a little UFD for people?
UFD?
Because we do usually cover that every week as well. You want?
Yeah, let me do UFD on the decentralized exchange. 1 second.
Just let me know when you want your screen, and I'll pull it up for you.
Yeah.
If you are just tuning in, there's about 656 of you at the moment. Please do give us a like and a follow if you're not. That would be Counter Crypto Pope, Mr. Goat3d, Mr. Remy Rai, who couldn't make it today because of family. And of course, NFAOFC is not financial advice, of fucking course. Everything we're here is just our opinion on the Goat3d Podcast, coming to you every Sunday, 5 p.m. London time. Take it away, brother.
Okay, I'm ready. Let's do it. I'm gonna do a top-down approach. So I'm gonna go from the high time frame to the lower time frame, so we can get a proper analysis of where this token is and which direction is going currently. All right. So it looks like to me, if I like to always start by just looking at the chart, the vibe about it. So it looks like the chart has gone up since launch, and now it's gone through a retracement period, and it's reaching a point where buyers and sellers are buying at equal a fair value right now. So there's not a lot of aggressive buyers or aggressive sellers currently in this token. So it's just consolidating, and you can see that from the volume as well. The volume is on average below the 10 moving averages. So I'm going to throw a Fibonacci from top of the chart to the bottom of the chart to the top of the chart. Okay. I like using Fibonacci. It just shows you what type of discount the chart is giving you right now, where it's currently at. So it looks like we've gone past the 61% retracement. We've gone past it. We've gone past the 78% retracement, and now we've reached a 90% discounted area. 90%, guys. If I was actually telling someone in the chat, if someone puts a car on eBay for you to bid, and it's 90% of the actual value, would you bid on it? I didn't get any answers, but you would probably bid on it, right? If it's 90% of the value, because you know that you can sell it at a later time if the demand comes into it again. If the demand comes to it, that's very important. This coin, in my opinion, has a very good community, and I think in old season when retail comes in, because of the vibe that it has such a good community, and the owner, the founder, keeps going live almost every day. It's a very unique project. It's like a unique selling point for this project to have an owner that's the face of the project. We haven't had that a lot in the meme coin world. We haven't had an owner that shows his face constantly. So that could be a very, very positive factor about this token. And I would take a chance at 90% discount just based on that. So around the 90 to 78% area, I'm going to draw a rectangle just to highlight the area, because I'm going to get rid of the Fibonacci in a second.
Can you go full screen on your chart?
On this platform, I don't think I can do it on this platform for some reason, but it's a shame. But what can you do?
No worries, my bad.
Yeah, I don't think you can. Yeah, I'm gonna get rid of Fibonacci. So we got that box. We're gonna get closer to the box. Okay, so we're gonna go closer and closer. See what's going on. So it looks like your typical accumulation area, right? As you can see, there's not a lot of action happening. So you see all these swings that are happening in the market right now. It's just a consolidation pattern. There's not a lot of action happening. So we just need to wait for aggressive buying to come back into this token to have a clear confidence that this token is going to go up. But for accumulation purposes, I'm buying every dip in this. As soon as it entered this zone, I was buying almost every dip. So I've been buying all the dips in this accumulation zone. So if price goes up, I'll be in instant profit. And if it does go back to the all-time highs again, if I get my ruler out, it could give you returns of almost 800%, 8x from all-time lows to all-time highs where it's currently at. So 8x, and it could even go higher than that in old season. Old season is just crazy, especially with these type of tokens, because when they go into price discovery, there's not a lot of areas of sensitivity, because investors don't know where to take profit. So it just creates it. So we just don't know how far it's going to pump to. And because of the low liquid nature of these tokens, they can really, really pump. Like we've seen before with SHIB, we've seen it before with Dodge, all those other meme coins. They can really, really pump and give amazing returns. So that's my take on UFD. It's in a discounted area, and I'm not giving any financial advice, but I've been buying it personally. I've been buying all those dips in the accumulation.
You are Mr. Goat3d. Now, I'm gonna get into what everybody's asking in our comments. Remember, guys, if you are here listening, paying attention, as always, we say not financial advice, of course. And if you do have questions specific to a token you may be watching, or questions about things in general, you can always let us know. And if we have time, we will get to it. Fart Boy's coming, Mermaid. Jesus, my guys, my Fart Boy army. I love these people. They're insane. When you talk about community, you don't get much stronger. But just before we jump into Fart Boy, we had a few things that were also asked. We talked about a little bit of the psychology of the market, and don't become a sheep, don't follow the herd, don't buy the fear that's pumped out there. Buy red candles, sell green candles. See red days is where you should be most excited, because those are days of opportunity. If you're in a project and it's a red day, you shouldn't be sad. You should be excited because your favorite thing is on sale. It's like going into the grocery store and your favorite bag of chips is half price or is 25% off. You're going to load up the cart. You should be doing that same mentality with your tokens. And then a lot of questions we've been getting asked is about taxes. Now, neither of us are tax advisors or tax professionals. The first thing you should always do is talk to your taxes professionals, but there are certain things we can address. Every trade, if for most countries, again, you're going to have to look at where you are and talk to your professionals. But for most countries, every single trade is a taxable event. You do not want to, tax evasion is illegal. Tax avoidance is not. And how do you avoid tax? Well, you need to look at, it's not just a simple answer, and it's not just going to happen overnight, but you need to look at countries that have tax-free benefits. For example, the Cayman Islands, Switzerland. Now, Portugal, I've heard, may have introduced some tax recently. It used to be tax-free to crypto, but I now don't know if it still is or if it's a small percent. Or you can look at a country where I base my business, Not Financial Advice fucking course. That's the business name. NFA OFC is based out of the British Virgin Islands. The British Virgin Islands is a tax haven and does not report to any other country. So I trade on behalf of my company in the British Virgin Islands, and that is a non-taxable event for me. Now, to do that, you just need a good lawyer. I can recommend Meta Law. They did all my services, and they can guide you through how to set up a tax company in any one of these countries. Is there some expense to that? Absolutely there is. Do you want to do it with a good legal firm? Absolutely you do. But if you look at the cost of the legal compared to the cost of what you would be paying in tax, it's kind of a no-brainer. So I'm hoping, I reached out to Meta Law to get them to come on a show and talk about that. Hopefully I'll hear back from them this week, and then next week's show we can tell you when they're going to join us, or we might do a completely separate, different stream for that, and go from there.
Can I ask a question?
Sorry
to jump in. What are the ranges of prices? So if anyone wants to know, what would it cost on estimate, something like that, to be able to set up a company, pay all the legal fees? Like, what will it total up to estimately? Like, obviously, it's going to be different for every person potentially.
Yeah, it's going to be different for everything. And then there's the book fees and the accounting and blah, blah, blah. There'll be a breakdown. It's not just one legal expense, and that's the only bill. There's obviously some fees to go on that happen in that specific country. I would be estimating, my situation was a little different because I did two. So I'm trying to think. You'd probably be looking at around, I would guess, anywhere from 8,000 to 15,000. Now, I know that's quite a spread, but it's also going to depend on how good your lawyer is. Some lawyers I've heard of people doing it for a few grand. That kind of scares me. I believe mine was around 10, kind of a thing, and then a couple of grand incidentals with government fees and stuff like that within the country. So, like I said, it's minimal. I mean, let's be honest, 10 grand still a chunk of change, but it is minimal compared to what I would be paying in Canada for tax, and hence why I don't live in Canada or have businesses in Canada anymore, because, 40%, no thank you. So what type of business do you register your business as? NFA OFC is marketing and educational content is what my company is based as, because we're here to help you learn not only about crypto, but just things in general. Ooh, somebody told me they got wine waiting. I'm in. I always like, and I saw somebody ask me earlier too, what kind of wine do I want? I don't know where all the wine questions came from, but I'm a Cabernet Sauvignon fan, people. So yeah, as soon as I can get the legal team, if they're willing to do a stream, I'll bring them on, and then we can actually have people ask questions to them. I'd rather have the pros talk to it. But the way simply around it is you start a company in a non-tax-free country, and then that company is behalf of who you're trading for. And then, your assets, if you want to buy a house, that would be in the company's name. Because as soon as you transfer that money into your own name in your own country, you are now bringing money in, and that would be a taxable event as well. So there are some things you need to understand when it comes to those tax implications. If you're somebody that absolutely has to own everything in their own name versus a business name, not the best thing for you, perhaps. So, Fart Boy, ladies and gentlemen, we have Fart Boy here. Now, it is a beautiful chart. This here is when we told all of you on the show to buy it. And to the current price right now here today, you'd be looking at a 3,039% gain. From its all-time high from when the time we told you to buy it. Not that anybody ever times a wick perfectly, let's be honest. You would be at about 5,500%. And I know some people that are in the group that even got in at better times. What we're going to do here is we're going to mark it up, have a quick look at it. But I'm also going to add some indicators because a lot of people have been asking, just a little bit about this. So we are on the 4 hour, just right off the bat. I'm seeing a nice, bullish flag pattern. We need to break out, come back, retest before we take off. Yes, we will have these levels here as support and resistance that we'll need to either hit, pull back, come out, and then retest those before we take off. Same thing here. Before we go, obviously this will occur down here because this is all future events.
It looks the same as before, doesn't it? It looks similar to the last consolidation it had, right?
Yeah, well, that's just it. Like, it's just right here and right here is virtually the same, right? And because I'm doing this on Dex tools, unfortunately, I don't have all the tools that are saved and at my normal disposal. Do I have my quick date and time?
You just recently launched on Mexi as well, so there's not a lot of data on the Mexi chart, so you can't really do TM.
No, and that's why I'm using the Dex chart. That is right. We did just have this project release on Mexi, and it was kind of cursed for timing because it happened right as the Libra crash. So the big pump that people were excited to see was kind of thwarted by the Argentinian government. But that is crypto, ladies and gentlemen. Mm-hmm. So I try to keep things fairly simple. I try to use a parallel channel, a trend line, and a horizontal line. And we're just going to leave those three tools now for it. And for trend line, I always like to use candle bodies because that's where the majority of the price action. Oh, right. I'm going to have to lock the tool. And what we can do is we can find major areas of support and resistance that lock didn't do shit. Because we know at major areas of support and resistance, probably where we're going to see them again. Right? So we know we're probably going to fight the 12, the 15, the 18, and we have definitely confirmed this 08 as support. It might dip a little bit down, but you never know. Right? So now we got some support and resistance in. And what we can do is we can add, screwed that up, but I'm going to fix that right now, though. Do I want to go to Wix? I'm going to go to Wix for the parallel channel. So I have a different parallel channel in our chat for Fart Boy because I did it from the past and we can see how it's moving. But right now, this would be the parallel channel that we need to retest at this level and break out. And it's on its way. And we can see where we've been holding and where we've been resisting in these differences. But what I'm going to do is I'm going to clean this up. I'm going to take all these lines away. Hopefully they made sense. You've seen me how I added them with the star. So you have them on your little toolbar. And what we're going to do is we're going to add some indicators. And I'm going to show you some very basic indicators to start with to get going. So we just go to our indicators right here. And one of the very first indicators that I learned was Bollinger Bands. By a guy named Bollinger is his last name. He was a brilliant trader. And I'm going to change the settings on the Bollinger Bands because I don't like the default colors. The median I'm going to make white, and I'm going to change it to dotted. The upper band, I'm just going to change it to gold. The lower band, I'm going to change it to red. And I'm going to take off the labels just to clean up the price. Bollinger Bands is now set up. Now, this is a very, very simple tool that was one of the first I've ever used. And white dotted line in the middle, and then you have your other two upper and lower bands. And the concept is price action is always fighting to get to the median. So if it gets too far away, it's going to pull down. If it gets too far away on the downside, it's going to pull up. And what you'll see here is when you have a red candle out and a green candle in, red candle out and green candle in, red candle out, green candle in. And when I mean in, it's going out of the band and then back in, out of the band, back in, out of the band, back in. I mean, this one just kissed. It's kind of weak, but out of the band, back in, just kissed, out of the band, back in. These are all entries. The reverse at the tops are your exits. So if you wanted to trade on the Bollinger Band theory, you would have bought here. Probably would have went through some panic if you're a new trader. And it's telling you to buy again. So you would have dollar costed entered your position. Let's just say you got the average buy in between and you sold there. There's your 624%. If you did it here, let's say you got a shit entry because you waited, and then you got a kind of a shittier exit because you were flying on hopium and maybe you got down there, 18%. Maybe you timed this one pretty damn good, 40%. So Bollinger Bands is a tool to help you with entry and exit and price direction. Because when it's too close to the top of the band, it's telling you it wants to fight back to the median. And when it's too low in the band, it's telling you it wants to fight back to the median. But no one indicator is perfect. You know, you can see we didn't quite break there. We didn't quite break there. We didn't quite get an entry there. It's slightly off. So I use multiple. Let's add the next one. The next one is an EMA cross, what I always refer to as the micro bear and the micro bull. And I'm going to turn off the Bollinger Bands for now so we can just look at each one of these independently. Now I'm going to change the settings. You can leave the colors if you like. I like just switching it up a bit.
The Bollinger Bands can also be used for exiting as well. You know, for example, if you want to exit the cycle of the crypto, you can also use the Bollinger Bands on the daily, on the weekly time frame.
Oh, absolutely.
It was so useful. I personally like to use it like that as well.
I'm going to make the lines a little thicker on this just for just for ease of use for people to see the screen. And then I'm going to make the crosses white. I'm going to take off the labels just to clean up my price scale. And I'm going to click OK. So we know nothing moves up in a straight line and nothing moves down in a straight line. It's actually very healthy to go up, down, up, down, up, down, because if it goes straight up, it's coming straight down. Right? So what we have here, is when we get these crosses, now you can see how it's hiding behind the candle. If you select the actual indicator, right click, bring to front on your visual order. So now we can see, and I call these bullish and bearish crosses. And it's indicating to you that we're leaving a bullish trend. Well, here was a bearish trend. We can see the price went down. Here's our bearish cross right there. Price goes down. Here's our bullish cross because we're leaving the bearish trend and we're going into a bullish trend. And man, did we ever. Now, when the lines are separate, the further these lines are spread apart, the more price action you're going to see. Right? So you can see how we were just cranking it here. It's too bad I can't wait till we have a lot of data on TradingView and I can show you way more cool stuff. But the further they're apart, and we can see that they're still pointing up. These lines are going straight up, right? It means price is still going up, and the further they are apart, the more volatile that action is going to be. So this here, when we're in here, none of this price history is here. Just on this one indicator alone, I know price is still going to rocket up because these bands are telling me, holy shit, we're moving to the upside. As soon as they start to curl, they're indicating we might come up to a bearish cross, right? Here, we got a nice flag. It didn't go into a bearish cross, cranked up. Here, we got the cross, right? So it's now telling us we're going into a bearish momentum. Remember, this is 4 hour, right? So what I tend to look for are these peaks in a bullish. When it's bullish, if it's peaking, that's typically when I'm in a trade, I get out. Doesn't mean it's not going to crank again, as we can see it did here, right? But I would rather get out of a position here than get out of a position here and wait for this cross. But that's the risk you take. And this is just one indicator. We just talked about Bollinger Bands. We can look and see now we have confluence. We're at the top of the band, right? So it's even saying we're probably going to go down.
Mm-hmm.
Now, the opposite is true. Once we're in a short-term bear market, the same thing, though. If we had massive spread pointing straight down, we're going to have volatility and price action, right? Volatility and price action. But as soon as they start to curl, this is a prime example right here. What's it showing us? It's showing us that this band is going to come up.
Mm-hmm.
This band's going to come up, and we're going to get that bullish cross. And then we're going to have price action continue. And where is it going to go? Just like we drew those levels of support and resistance before with the blue lines, the horizontal lines that gave us the price. Right? So no one indicator is perfect. They're not going to work all the time. And when we start to combine a few, they give you more confluence to what's happening. We're seeing the belly of the bear here. We're seeing an entry on Bollinger. It's telling us price is moving to the upside. Let's add one more indicator so we can get more confluence. Stochastic RSI. Very simple. When stochastic RSI is cranking at the top, typically a sell indication. Now, when it crossed here. Was it the best timing for the top to sell? No. It came a couple candles later. But you're never going to time the top. You're never going to time the bottoms perfectly. It crossed down below here. Was this the best entry? No. But we know this isn't the best entry right here because of two other indicators. We just got the bearish cross saying we're going to have price action to the downside. And we haven't got an entry on Bollinger. But here we got an entry on Bollinger. We got a really ugly belly here. And we got an entry here. 1, 2, 3 levels of confirmation to say that price is going to move to the upside. But did it go straight up right away? No, it took all the way to over here to get from here to there, right? 2 exits. Didn't even get an entry down here. And that's the curse, because sometimes you can get an exit and then it can still rip, right? This is a token I'm holding for full disclosure. I'm not swinging this. I'm just explaining how these indicators work for it. Meme coins, you can get destroyed swinging because they just rip whenever they want and they throw all the indicators out the window. But you can even see down here, am I still on pencil? We got a buy. We got a buy and we got a belly. 1, 2, 3 indicators telling us this is a hella entry. So I kind of hope that makes sense. Do I use Goat3d indicators? Yes, I do. CryptoLens just asked that right there. These are all just free indicators that anybody can use at the moment. They're very basic. I've just explained the very basics of them. I mean, when you look at what I was doing earlier on my other screen, I use my own custom indicators. I have 6 of my own that I've helped design. And when I have here, I'll see if I can, just give me a second. I will.
You also showed a moving average that changes color. Was it the 50 moving average? Is that part of the package as well?
I changed the colors to it just to make them easier for.
I like it. It shows you the switch from bearish to bullish.
Flattery will get you everywhere, my friend. Sorry, this just takes a minute because I'm doing multiple screens on multiple computers. So when I'm looking at, for example, when I'm in my trading view and I have 9 indicators to add to my confluence, and that can get, let's actually do this on Bitcoin because that's probably way better. Make sure I'm on the right tools. You can see how it becomes kind of, for lack of better words, a clusterfuck of lines and data. But when you know how all these indicators work and what they're doing, you get to see a much bigger picture. And like I said, I have my own custom interface. I use even Lux algos, which are also free. And then you'll see Bollinger Bands right there, But when you want to clean it up and just look at price action, you can always just hide your indicators and you can just look at price action. So indicators are just a tool to help with confluence, to get you to understand how the market is moving. We start every show with what I call the money flow cycle, because that's your prime indicator. If money's coming into the market or leaving the market, that is your first indicator. If it's leaving the market, prices are going down. You don't need any other indicator to tell you otherwise, right? But if we're seeing a nice steady flow of money coming in or money staying in, it's the indicators that help us get to the entries and the exits of those things. Somebody asked, I see an inverse head and shoulders on the chart. Am I mad thinking this? No, you are not. I've seen that as well. This is so cool. I love the confluence theory. Thank you, Canna Mermaid. You are more than welcome. Ladies and gentlemen, I was a little long-winded. We did run over a little bit today. We're at an hour and 15 minutes, but there is 885 of you watching. Again,
nice.
if you have not followed Canna Crypto Pope, Mr. Goated, or Remy Rye on our X accounts, please do. This is also streamed through my company, NFA OFC, which does stand for Not Financial Advice. Fucking course. We're just here to help, share what we see, and answer any questions you might have. Thanks again for tuning in. We will see you next Sunday, 5 p.m.
Thank you, guys. See you later.